Welcome to this Indianomics Deepavali special. How will the Indian economy perform in Samvat 2081? The early Q2 data was weak, be it the Nifty earnings forecasts or IIP or GST collections, all of them subpar. The Reserve Bank itself has pulled down its second quarter GDP forecast from first 7.2 to 7% and now to 6.8 in their latest bulletin. But, and this is a very big but, the Reserve Bank Deputy Governor Michael Patra, speaking at the New York Federal Reserve program just earlier this week, said that Reserve Bank retains its full-year GDP forecast at 7.2%, at 7.7% for the next year, FY26, and he sees around 8% thereafter. Now, two big CEOs who spoke to us, Rajiv Bajaj and TVS Motors management, have also said that the festive demand is robust. So Q2 weakness may not spread to Q3. How will India's growth story therefore pan out in the rest of Samvat and next year as well? Let's ask three top economists. Chetan, Ahya, the chief Asia economist and emerging markets expert at Morgan Stanley, Santanu, Sengupta, India economist at Goldman Sachs, and Vishrut, Rana, the economist for Asia Pacific at S&P Global. Gentlemen, good morning and thank you very much indeed for joining us on a very auspicious occasion. Well, first up, Chetan, let me start with you. You know, there is all this two-quarter data which we can whine and crib over, and there is this big statement coming from no less than the Reserve Bank. We stand by our 7.2% growth. Where are you? Do you still think Indian growth can be robust this year?
So we are at 7%, Latha, and so we are a tad lower than RBI's forecast. And we also think that when you take the account for the second quarter number, when it comes out, the GDP number could be lower than what we had initially anticipated. We thought it would be 7% as well. But now we are recognizing that there have been some downside risks that has emerged to that quarter's number. And going forward, we are forecasting that growth will revert back to somewhere around 7% in the next two quarters, and then decelerate towards 6.5% to 7%. So that's kind of our growth outlook.
Okay, so you're not very far from the Reserve Bank, just 20 basis. But that is not what the bulk of the economists told me. I did a CNBC TV 18 poll, and people were actually pulling down their numbers for Q2, of course. And the indication was that after Q2 data comes out, they will pull down the full-year numbers. Santanu, what's your sense? Does this positive statement from Patra and from people like Rajiv Bajaj and TVS Motors want to, rethink your second half numbers?
Well, Latha, we have been at 6.5% growth for FY25 for about 2 months now. We downgraded growth a couple of months back. The reason at that point of time mainly was that the government capex spending hadn't come through. We had expected some recovery in the previous month. It hasn't. Possibly it's going to recover in the second half, and therefore you're going to get a boost from the government capex undoubtedly. But given how far it is from the budgeted estimates, we have our doubts whether they'll be able to meet the full year's numbers. You've seen it in the previous couple of years as well. You budget for about 10 trillion INR, you ended up spending about 9.5 trillion. You've budgeted for 11.1, you'll probably end up spending a little bit lesser. But there are two other broader macro factors going on. There's a slowdown that we are seeing in the urban consumption landscape. There's a nascent recovery in rural, but the offset is coming from urban as well. Credit card spends data is slowing. There's been a macroprudential tightening from the RBI almost a year back, and it's playing out now, right? So your retail credit growth has slowed down from about 25-30% towards the mid-teens, and possibly it'll slow down more. So when you're tightening macroprudential at the same time, and that's been a very strong lever of growth, that's gonna subdue consumption in our view. There's a fiscal drag that is going to continue into next year as well. And then you think about the world, can't really imagine a net export material boost coming. And therefore, we are happy to be at 6.5% growth for the fiscal year 25.
Okay, yes, there is a strong case, and I would say at the moment the majority are on the sub 7% side. But Vishrut, Rana, the world is not that bleak. The last GDP number we got from United States is 3% for such a large economy. July, August, September, actual numbers, not even forecasts, is 3%. China is giving a big boost. So do you think there is an upside? What's your number and what's the likely upside tilt, if any?
Yeah, thanks, Latha. I guess we fall somewhere in the middle and towards what you were describing earlier in terms of the macro scenario. So we forecast 6.8% growth for this fiscal year. And part of the reasons have been discussed already. We do see some of the slowdown in the high frequency momentum in the economy. There is, of course, a strong base from last year where growth was fairly strong as well. Over the medium run, we remain positive for the factors that you mentioned, that there is this supportive global growth environment. In addition, the domestic growth drivers are still in place. For India, the capital expenditure, the infrastructure drive, crowding in private investment, the demographic story, technology, all of those factors supporting India's growth momentum over the medium run. And we believe that should push growth into the 7% range at the moment. And as you said, at the moment, external factors still remain reasonably steady.
Yeah, fair enough. I will come to the medium term in just a bit, because that is the larger question we should be asking ourselves. Chetan, just quickly, if you can parse the global environment, you look more seriously at China than many economists. With all this fiscal push, will you see some recovery over there, and will that change the global picture at all?
We think the policy response that the Chinese government has announced so far is actually good. It's significantly positive, but it's unlikely to be a major driver for global growth. We think it's going to achieve somewhere around closer to 5% GDP growth. But that's not going to be like half a percentage point or 1 percentage point acceleration from what everybody else were expecting before this policy announcement. And so I think it's sort of more like status quo. And we read the policy actions more like defensive, trying to prevent further slowdown in growth and a drag on global growth rather than actually a big contributor. But you're right. I think, Latha, you mentioned earlier that the US is doing well. So the US growth is going to help the global economy. And on balance, we should see global growth around 3.1%. That's already our forecast is this year as well as next year. So there is stability from the global side, but I wouldn't say that there is a significant positive tailwind coming from the global side.
Okay, fair enough. Even the IMF's forecasts seem to be just maintaining that 3.2% for the global economy, but they are not lowering it. That's the big point. The global growth picture seems to be counterbalancing, one sector counterbalancing the other. Okay, let me quickly get in an inflation question before I come back to the medium-term growth story. How worried would you be, Santanu? The food inflation number was bad, and October nowcast is not looking any better.
Yeah, so I think there's going to be an overshoot from where our estimates are for the current quarter, given the upside that we have seen in vegetable prices. But these things tend to mean revert pretty quickly. So post December, as you get into the winter season, you're probably going to see a sharp correction in vegetable prices, and you would align inflation. Because you mentioned Dr. Patra's speech earlier. Yeah. He's also said that it'll probably align with the RBI's inflation target in the Q1 calendar year next year, and thereafter in the fiscal year of FY26. That's exactly how we are seeing it. So some upside risk to the around 4.5% number that we have for the current quarter. It'll probably push closer towards 4.8 or so, which is the RBI's forecast. And then you revert back towards a 4.2, 4.3. I think the main point is that if you strip out vegetables, headline inflation is running at 3.5%. And it's been running below 4% for the whole of this calendar year. Okay. Core inflation is running at around 3.5%. So really, keeping aside vegetables, there's no very strong inflation impulse that we are seeing in the economy.
Okay. Well, I'll come back to rate cut expectations in just a bit, and whether RBI will loosen its, as you correctly pointed out, tight macro prudential rules. But Vishrut, what can mar the picture? That's one more question I have to squeeze in before we go into a break. a possible Republican victory, does that topple things a lot for India, or, India can still chug along?
So in terms of the external risk factors, I think there's a number that stand out. One of them would be, of course, a global change in the financial conditions. So what we've seen over the past couple of years is that financial conditions remain very stable. It is easy for firms to access capital markets and the funding markets. And if that does change because of financial shocks or because of rising interest rates globally, then that does present a complication to our growth outlook. In terms of wider growth momentum, I think we would see Asia-Pacific, China growth numbers as well, a slowdown in the US, all being potential factors that could affect the Indian economy from the external side.
We have to discuss more about a possible Republican victory and a rise in tariffs. But I also want to ask about whether there will be an S&P upgrade of Indian bonds. What happens to the medium-term story of Indian growth? How many rate cuts from RBI? All those questions after the break.